Here's a fresh chart and a look at my settings. You can see I have JP or Japan checked off for the Asian session DR, and I use the extended DR lines. I keep them black and solid so that they're easy to see. I also activate the EU lines, but I don't extend them. You'll see why in a bit. I make these lines pink so they're very visible. After that, I turn off virtually everything else about the indicator, including the IDR, the midline, and the actual fractal frenzy signals themselves. You can turn off the signals as well as the IDR and midlines by coming into the color and dropping the opacity all the way to the bottom. Sometimes you may need to click the plot alternate shapes box to make sure that no signals show up. It's weird, but just trust me. All that being said, if you're interested in more traditional DR, IDR content and using fractal frenzy as an entry indicator, make sure to go check out any of Alex's content on this YouTube channel. All right, let's hit the charts. Down here on the chart and zoomed in a little bit, you can see exactly what we set up on the settings. The Asian DR is a solid line that extends all the way till present time, and the EU DR is little pink lines that just show the session itself. From a bias perspective, I like to follow a rule that I learned from Alex, and that is if the EU DR is above the Asian DR, I'm bullish, and likewise, if the EU DR is below the Asian DR, I'm bearish. Let me show you some examples. As you can see here, the high of the EU is lower than the high of Asia, and the low of EU is lower than the low of Asia. This is what I mean when I say that the EU DR has to be lower than the Asia DR. This setup gives us a bearish bias for our trade ideas. In this example, you can see that the EU low is above the Asia low, and the EU high is above the Asia high. This setup gives us a bullish bias for any trade ideas that we have throughout the day. Here's another formation that can occur with the Asian DR and the EU DR, and I think that it's worth bringing up because almost always these days are never worth trading. Just look at this price action. If you have a situation where the EU high is above the Asia high and the EU low is below the Asia low, stay away from these types of days. Now, how do we translate all of that into support and resistance? On days when price has a clear direction through the bias system that we established, look for price to pull back into the Asian DR level to use as support and resistance for its next move. If you're struggling trying to figure out whether a DR line is support or resistance, you should know that just like every other form of support and resistance, DR lines flip between both depending on the price action. If you've got a bullish bias, look for DR lines to act as support for pullbacks during your uptrend, and if you're bearish, look for the DR lines to provide resistance for your pullbacks during your downtrend. All right, let's dive in and look at some examples, but first we need to make a little bit of a list of criteria that we can apply to find some entries. Let's use a little notes indicator to keep our criteria up on the screen. After establishing my bias, I want to see a liquidity sweep that supports the bias. Liquidity sweeps can be body closes or wicks, so keep an eye out for tricky price action. After the liquidity sweep, I'm looking for a break of structure in the direction of the bias. After the break of structure in the direction of the bias, we want to see a pullback and a continuation pattern to complete the break and retest pattern. At this point, after you have the liquidity sweep and the break and retest pattern, you should have market structure matching your bias, and once you get your entry pattern of choice, whether it's an engulfing candle or three-line strike or whatever it may be, it's go time. Along the way, you're going to have lots of days like these where either the trade criteria doesn't get met or price just trades too far away from the Asian DR to use it as support and resistance. In situations like that, just don't trade. It's totally okay to just have days where you do not trade. This trade plan takes entries on the 1 minute, but it's not necessarily a scalping system that takes 5 or 10 entries a day. This trade plan takes less than 1 trade a day, and that's okay. So first day here, we have no trade criteria met, so we don't take any entries. The next day we have a bullish bias, but price trades too far away from the DR to take any entries. Third day, no trade criteria gets met. On the fourth day, we have one of those bad pattern days, and we just don't take any trades these days. So we've gone 4 days now with absolutely no trades. That's okay. On this day, we finally get some entries and we have a bearish bias. We trace market structure bullishly after this news candle, and we see a liquidity sweep that supports our bias right here. Then we see a break of structure after the liquidity sweep right here. Here's your retest. Here's our engulfing candle entry. We get another breakdown here, another retest, and another entry right here with a 3-point turn. Both trades go on to win with their 2R targets. On the next day, we've got a clear bullish bias, but price is trading too far away from the DR to capitalize on an entry. We've got a bearish bias on this day, and after price goes bullish for a while, we see our liquidity sweep right here, followed by a break of structure, and then we get our first retest. We lose this, and that's okay, because we get 2 entries after that that both go on to win. As we get to the next day, we have another bearish bias, followed by a news candle, a little bit of bullish market structure to start off the day, which quickly turns into our liquidity sweep supporting our bias. We get our break of structure, and then we get our giant engulfing candle after the retest for our entry for 2R. We get another 2 entries on this day, 1 win, 1 loss. This is a no trade day because of the type of pattern. We have a bearish bias here, but price trades too far from the DR to capitalize on anything. Price trades too far from the DR despite the clear bullish bias. This is a tough day to have to sit through to track all of the market structure, but we do have a little bit of a bullish bias, but no real bullish criteria gets met. We have a bullish bias today, but we get nothing but bearish liquidity sweeps all day long, which leads to just not getting the criteria to take an entry. Another bad pattern day, so no trades. We have a bullish bias today, today, and we get a nice textbook trade after price retraces back down into the DR. It goes a bit further down, but that's okay. We get our liquidity sweep followed by our bullish break of structure, and the retest is very small, but that's okay. We'll take it anyway. On this day, we have a bearish bias, but the trade criteria doesn't get met. Likewise, on this day, we have a bullish bias, but the trade entry criteria doesn't get met. We have a bearish bias, and even though it takes a little while for the entry criteria to be met, it does show up and we get another winner. And then today, on the last day of September, we have a clear bearish bias, a nice double top with a liquidity sweep, break of structure, retest, entry for 2R. All in all, this strategy went 9 and 2 in September, targeting 2R, but there's a lot of room to trail profits. Make sure you backtest and forward test any strategy before you plan on trading live with real money. If you liked this style of using indicators to help you draw or find support and resistance, make sure to check out my other videos.